So welcome to our review of 2014's retail warehouse deals. As usual, I'm going to do a little piece on the market volumes, some analysis and then some significant transactions for the year. So 2014 was an excellent year for retail warehouse volumes. One of the highs, 2.9 billion in 124 deals. That's up from a good year 2013 of 2.7 billion. Significantly though, there were 13 deals over 50 million. And this is really good for bigger lot size liquidity. And I noted with a bit of analysis that the average yield on those 13 deals was about 5.26%. Now, quite a few of unsold deals going into this year and still carrying over about 250 million of transactions under offer. So the buyers in the market were principally funds, slightly down on last year, which is actually good for the market to see some extra diversity. Funds took 56% of the market in 2014. But also increasing amounts of investment coming from private equity, private individuals and property companies, which is excellent for market liquidity. So turning to the vendors, just under 40% of these were institutions. So overall that means funds and institutional money is very much net investors into the sector. Predominantly the vendors are coming from property companies and developers. And the developer side of the market I want to develop a little further, and we'll do so in our breakfast briefing later this month. But importantly, there were only 4 development fundings that we tracked this year. In 2014 there were a large number of deals, but I've narrowed my analysis down to the 40 deals over 20 million, which equates to about 2 billion, so the vast majority of the market. By far the most significant was Foss Park. This was bought in a JV between the Crown Estate and a significant overseas investor. Deal size was about 345 million, reflecting 5%. And the significant part of that was the deal lot size, by far the largest deal in the market this year. Another significant deal was Blackwater Shopping Park, which Henderson sold to Lothbury for 78 million. Significant because of the very keen yield, 4.25% net initial. And finally, my deal I'd like to talk about is Beacon Retail Park in Milton Keynes, which DTZ transacted on behalf of Aviva, selling also to Henderson investors for 29.2 million, reflecting 5.65% net initial. In 2014, we did quite a bit of analysis on the deal sizes over 10 million, and that was about 2.4 billion, so the vast majority of the market. And we split that down into the 4 subsectors. Shopping parks was just over £1 billion worth of that market, and 12 of those transacted at an average initial yield of 5.7%. The remainder of the market, that's hybrids, traditional and solus, large solus deals, transacted at an average yield of about 6.5%. Now there's lots more analysis that sits behind that, and that is available in our quarterly and annual review of 2014 that's available at dtz.com.